What is going on, Alpha Hunters? The markets are closed for the week of September the 20th. And we got some pretty good stuff that went on this week. Some unexpected stuff, but you know what? It is what it is. We knew we were going to get some information. We just didn't know how drastic the information was going to be. So let's kind of go through it and we'll talk about a few other things. So Monday, kind of not really a big gap to start the week on Monday. It was just kind of a choppy day, a little bit of a base action there going into midday. Nice little push up into the high of the day right there at the close. Nice. Didn't look too bad. Tuesday, nice gap up there on Tuesday to start the day. Just kind of rolled over into the middle part of the day and just kind of chopped sideways. And a nice little bump there to end the day. So we ended the day positive there on Tuesday. Nice little gap up there on Wednesday. Pulled back, bounced as we then went into the FOMC meeting decision. This was the big one for the week. Caught me, not to say off guard, I just wasn't expecting them to cut 50 basis points. That's right, they cut 0.5%. I kind of thought they would do a quarter because really they hadn't expressed any urgency to do rapid cuts. But one of the things that we were kind of talking about Tuesday and even Wednesday, even last week, was if they did cut 50 basis points, well, I would take the opportunity to most likely sell the pop that would come on the market. We did get that pop. We did sell down that afternoon, but that was short-lived because then Thursday morning, we just gapped up. Now, you could say that this is a data point or whatever from initial jobless claims. Initial jobless claims came in good, but it wasn't the reason why we gapped up on Thursday. We gapped up on Thursday because the futures traded higher all night. Just the whole night, they just traded higher. So Thursday, we did have a pretty large gap up there. And we kind of had a quick pullback there to kind of start the day and just kind of push higher into the middle part of the day. Last 2 hours kind of pulled back there. And then Friday, nice little gap down, pulled back, pushed higher into the middle part of the day, pulled back, pushed higher to close. Okay. Now we did have a quick, rapid sell-off here in the last 15 minutes. Take a look at a few other things because there was some really weird, interesting price action across some certain tech stocks there. So, yeah, the Fed did cut 50 basis points. Kind of not expecting them to really go that deep, but the market was kind of split. Almost nearly a coin flip. I think it was 60-40 going into it on Wednesday. If they were going to cut 20 or 50 basis points, they wound up. I think the front running odds wound up being the 50 basis point was 60% odds. So there you go. We got the 50 basis point cut there, and we did wind up making new all-time highs there on Thursday from that huge gap up that we had on Thursday. The thing I would still say is I would still probably just not be looking to be aggressive here because them saying that we need to cut aggressively is not one of confidence on the demand side in the economy. Economic activity doesn't sound like it's going gangbusters, and interest rates have been declining here for the past 4 months, four and a half months or so. Now, as far as sector rotation for the week, we did have energies doing pretty well throughout the week. They got hammered pretty good last week, so they kind of came back a little bit this week. Financials, communications, discretionaries, industrials, and utilities all outperformed on the week. Materials kind of in line with the market there. Tech selling off. You can actually see they were actually positive Thursday midday, but wound up having a negative or underperforming week there by the end of the day on Friday. Healthcare, staples, and real estate all underperformed pretty good there for the week. Kind of makes sense with real estate as we actually did see yields bounce back pretty good really since like Tuesday, Wednesday lows there across some of the yield curves. So just taking a look here at a few stocks. Here's AAPL. See this huge drop that we had right there at the end of day on Friday? Don't really know what led to that. So I'd be interested to see if there's any kind of news that comes out about that. I haven't really seen anything as of now. So I don't really know if that was led from AAPL. Here's a look at Microsoft. Microsoft also had that quick little drop. A lot of volume across both of these. If you look at both these stocks on a daily, yeah, they did have quite a bit of volume. Nvidia didn't really also didn't I mean it traded down, but not nearly as bad as AAPL and Microsoft. And then take a look at Alphabet. Like Alphabet didn't really get hit with it. Amazon didn't get hit with that little drop either. Meta did get hit with that little bit of a drop. So yeah, I don't know what it was about AAPL and Microsoft, but you can look at the daily and you see how much volume wound up coming in. That was all right there at the end of the day. Here's a look at Microsoft. A lot of volume came in there on the daily. So I don't know what it was about the end of day on Friday that freaked someone out. Someone out there got freaked out. All right, back to the regularly scheduled program. VIX, nice little pullback. Got a little squirrely there on Wednesday. Kind of expected. Hasn't gotten back below kind of these August lows. And it's just kind of hanging out, not really doing a whole lot, not really dropping off. But it's in the teen area, so it doesn't really have to do anything crazy. This is kind of just the normal spot for it to just kind of slowly grow, grind lower. And the market would kind of slowly kind of trickle higher. And that's just kind of where we are. DXY, the dollar index, nice choppiness throughout the week. Kind of looks like maybe we're basing here a little bit, kind of getting a little squirrely here as kind of maybe starting to sideways move here. Be interesting to see if that kind of continues into the early parts of next week. But you can definitely see from Wednesday to Thursday the market reaction with that huge lower wick that came in on Wednesday, taking out that August low, and then that bounce. It didn't hold it, came back down. Also then came down and took out that August low again, but didn't hold that. So it is an interesting choppy period here for the DXY, trying to get pushed down by these moving averages, but there's clearly some kind of support still sitting here, some kind of buyers still trying to buy that up. So we're going to find out probably pretty soon who's going to wind up winning out. If we don't wind up breaking that down, I'd imagine we'll wind up basing here, probably push higher later on. GLD. Well, I'm just going to say it. I would just be bullish on any dips. So there you go. Looking pretty good there on the GLD. Nice little pullback to kind of start the week. Quick, rapid sell-off there after we got basically the interest rate decision there on Wednesday. See that quick initial pop, and then we just dropped off. We came down and hit that 10 daily EMA there Wednesday by the end of the day. And we just kind of exploded higher there Thursday, Friday. So looking pretty good there on the GLD. Just be bullish on any dips. I'm not going to change that tone. 10-year yield. 10-year yield. Could go through all the yield curve, but I'm not going to. All right. So 10-year yield had that little low that we had on Tuesday. Okay. And we kind of went bullish on yields every day, after we hit that little bit of a low there on Tuesday. The interesting thing, okay, and this is one that we kind of talked about over the previous couple of weeks, was if we get to the interest rate decision and interest rates pushed higher and then the market pushed higher as well, I would take that as an opportunity to definitely be selling out of positions, locking up good gains that you've got in certain areas, especially tech areas. So I think we'll probably continue to see yields kind of base and maybe continue to push higher, because as for now, I don't really see a reason for them to drop. I mean, we just got a 50 basis point cut and yields went higher. We shall see, but the way yields bounced there Wednesday, second half of the day on Wednesday and into Friday's close, doesn't really say yields are going to drop off anymore. 10 and 2 inversion, talking about bouncing. Look at this move. We had that quick little drop off there Wednesday when we got the Fed interest rate decision, and it just bounced pretty hard. I think we are clearly in the uninverted, back in the normal side of the yield curve there. So looking pretty good. HYG, high yield corporate bonds, looked pretty good all week. Nice, rock, steady, moving higher. This is the risky side of bonds, so people are probably looking at, oh, you know what? We can go back into risky assets. Kind of, I mean, maybe it makes sense. But if yields continue to push higher, bonds might be set up for at least a decent pullback, if it's not more than just a pullback. LQD, nice little pullback into the 10 EMA, second half of the week after we got the Fed interest rate decision. You see a huge upper wick that we got on Wednesday. Yeah, so this is kind of the part where I'm not too sure. I mean, we had a nice little pullback to the 10 EMA. If yields continue to push higher, I'd imagine the LQD kind of drops off. I'm just more surprised that HYG was as bullish as it was. And the TLT got rocked this week as well. We saw the yields actually rallied pretty good. So here's the TLT dropping pretty good. So a lot of people are going to be saying this is going to be a huge false breakout, getting up this high. Obviously, we did take out that December high, but we came right back down below it this week. And it's just, yeah, I mean, it's kind of maybe a good time to just wait, be patient if you're looking to trade these things, because if we did just change directions, you'll get a little bit better of a clear picture and set up later on. Okay, so this was absolutely hilarious. This article came out Friday morning, early Friday morning from Bloomberg, and it basically says buy bonds and gold as bubble risk returns. BOA strategist Hartnett says. The very interesting thing about that is, well, we have been saying that here, right? We have been talking about, hey, I'm not trying to say be trader bullish on bonds. I know we just got done looking at bonds. I'm not saying being trader bullish on bonds. Absolutely not what I've been advocating for on bonds, because it is very easy to see that headline and to get that mindset of being trader bullish on bonds. I would rather buy short-term bonds, like 3-6 month bonds, and hold them to maturity and roll, and then do that again until you can kind of get a better grasp of equity markets and that kind of stuff. Gold, yeah, we've been saying it since Q4, about a year ago when we got that. We were having that drop off there at the end of September, early part of October, and then we had that quick bounce back going into the middle part of October last year. And I was like, yeah, it's just bullish gold time, and it's just like been, be bullish on any kind of pullbacks and dips and that kind of stuff. And then there you go, BOA coming out saying that. The other area, and I definitely put that also out in the video Thursday. The other area I would say is utilities, and this is a big one that just came and dropped Friday as well. 3 Mile Island nuclear reactor to restart under Microsoft deal. Now, the very interesting thing about that is who is doing it. One of the few nuclear reactor companies or nuclear utility companies is Constellation Energy. And there you go, up 22% intraday on Friday when that news broke. They didn't even have this run going when we did the live stream and saw that what had happened on the news that it broke. I do like utilities. That would be the third area besides the bonds and gold area, or precious metals, not just gold, but maybe like precious metals, that I would say would also look to have exposure to. And the big reason why I say utilities, I like having more exposure to nuclear energy, which Constellation Energy is probably the bigger one in that area, I guess, out of the utility companies in the S&P 500. But a big reason why, I just don't see a drop in demand of energy coming anytime soon. Not with AI. AI has massive demand for energy needs. So I just don't see where you look at the future demand of energy, and I just don't see how you don't want to have exposure to major providers for large scale energy. So this is what the XLU has been doing here over basically roughly the past 12 months, looking pretty solid there in the utilities sector. All right, take a look at the IYT. Transport's been holding pretty good. One of the few stocks that actually have been doing really well in the transports area over the past year or so has been FedEx, who had earnings Thursday after the bell and did not report anything good. Basically just dropped off pretty substantially there. You see the IYT got hit by 3.2%. It's pretty much just hit everybody in the transport area, rail, freight, trucking freight. So yeah, not a good one there as far as transports go. So we'll see if that is maybe some front-running indication of economic activity to come in a future slowdown? Question mark. Yeah. Anyways, FDX does not do anybody any favors Friday in the transport space. RSP, 4 out of 5 days this week had selling action. What do I mean by the intraday selling action? So what I mean by that is the close was lower than the open. Gapping up, that can be almost anything. Just it's not exactly the most liquid time there for a lot of equities. So it's pretty easy to push it around, especially if you have access to those markets and stuff like that. A lot of people don't really mess around with it because it's pretty low liquidity. But anyways, yeah, we did push higher this week, but 4 out of 5 days this week, especially the latter part of the week. Monday kind of just had that continuation from last week, the end of last week, but after that, it was just like everybody was just taking the opportunity to sell as we were hitting new all-time highs. So that is going to be the interesting situation between the RSP, the Qs, and the SPY. DIA, okay, about the same thing. Friday it did eke out a little bit more of a daily gain above the open, but you do have quite a bit of selling there that came in the middle part of the week as we were hitting all-time highs as well. So I'm not saying that we're going to have like any quick reversals and we are going to start to sell off like 5%, 10%, 20%, nothing like that. But I'd be willing to be a little bit more cautious right now because the Q's definitely not leading at all. IWM, huge upper wick there on Wednesday, gapped up to the top end of that upper wick on Thursday, and then so far we've traded down from there. So we'll be curious to see kind of where we go. We basically are just back up to those highs that we were putting in back in July. Not all the way up to this one wick that we threw July 31st, but yeah, I mean, I wouldn't be surprised if we'd have a little bit of a pullback here. All right, and those Qs. So we'll talk a little bit about the Qs and SPY. So we took a look at the RSP. RSP is basically hitting all-time highs, and now we have this huge switch where the Qs is not leading anymore. And typically when we see that, whenever we see that, we see the market change direction. We get bigger sell-offs and stuff like that. Now, it's going to be really kind of tough because we even did get a switch back here where in the middle of July where we had lower highs here over a few days, especially compared to SPY, and SPY had higher highs. And then we had that drop off for the rest of July into the start of August. So this one is going to set up across multiple months and maybe even into October. If it stretches into October and the SPY and the RSP make a new high in October and the Qs do not, then that'll be across quarters. So if you have a little bit longer, time frame on your charts, that might be a little bit more significant to you. But it would look interesting if it did happen across Q3 and Q4 calendar, and it wouldn't look good. I can tell you that it wouldn't look good because that would be just like a mother load of a switch that I mean we haven't seen one that large across that large of a time frame in maybe ever, but we've also never seen tech sectors have this much of a weighting on the US markets. So we are at a pretty interesting area here. I would rather be selling out of positions. That's one reason why I changed the thumbnail. I would rather sell out of positions. We've been doing pretty good as far as calling a lot of these shots here, but this one might take a little bit of time to kind of play out. I don't think there's any rush to just bail out of the market here over the next day or two, maybe to start the week. I would probably just look to lock up maybe some of your best ones and steadily do that over the next couple of weeks. Once we get to October, I'll be curious to see kind of just how the market performs here over the next 2 weeks, and then as we get into October, the first part of October, right? So the next 2 weeks, but in 2 weeks we'll have a split week between September and October. So that's just kind of how I'm feeling about it. I wouldn't be surprised if we have a little bit of a pullback, maybe, or a little bit of a pull lower, or maybe this next week, and then we kind of push higher as we then go into the end of September, maybe beginning part of October, and we start to get back into earnings season. And I think once we start to approach the middle part of October, people are going to look back at the previous quarter when we got to tech earnings, and people are going to start to be like, yeah, screw that. I do not want to have exposure to this. And people might start to really get defensive before we get to tech earnings as we get into October. So that's kind of what I'm thinking. I think you'll be okay to just kind of like steadily be selling out. I think the three areas or strategies kind of I mentioned earlier, probably not going to be a bad way to go for now. Just kind of see how things kind of play out. Give yourself plenty of time. I think right now it's not about not being along for the ride to the upside. I think right now it's going to be about protecting capital at very advantageous positions and time periods in the market. And that's kind of just my perspective. Other than that, feel free to ask me any questions. Enjoy the football. It is still hot in southern Texas. I can tell you that. I'm really looking forward to this fall and winter. Alpha Hunters, have a great weekend and take care.